Good evening, everybody. Welcome to Zoom at 8. My name is Julianne Peterson, and I am your host every Tuesday night for Zoom at 8. We have been here for over 4 years. We've been doing Zoom at 8, and there are people who have been here for all 4 years. And I know of two of them who are here tonight, Mark Gross and Kenneth Sumners. All those guys, both of those guys have been here for almost the entire time. So it's been successful, and we can't do it without you. And so what is Zoom at 8? Why did I create this? Well, I noticed that there was an education program that didn't have an ecosystem that was there to help the investors find deals, find investors, find sponsors, find insurance, cost segregation people. And that's why I started this 4.5 years ago. So if you are new and you don't have a Rolodex, you can get all of your teammates here at Zoom at 8. And that's what my hope is. And certainly I would like to work towards, getting you your loan for your multifamily. I'm from Old Capitol. We are specialists in this area of multifamily. Now, we will do other asset classes, but we really are specialists in multifamily. So if you've got a deal or you're thinking about a deal, let's jump on a call. Let's get on some email threads. And I'm going to look for your T12, your rent roll, the offering memorandum, if there is one, and your underwriting. And we can give you a place to start so you can underwrite this. And if it does make sense, we'll drill down with our underwriter and get you exactly where we believe it is going to trend and get you financing. So again, we welcome you to tonight's conversation, live conversation with our industry experts. We have the famous JT Lynch in the house with Ramey King. He has been here as long as I've been as well. And we're also going to visit with Brian Crisp, who's also in the real estate industry, who works alongside of JT. So we're going to get to know them a little bit better and help you understand what is going on in the insurance industry. Why are we finding ourselves struggling in this area to get these deals done? So tonight, I'm hoping that you'll walk away with a better understanding and hopefully a relationship with one of my partners, Ramey King. So if you guys don't know JT, tonight's going to be special, not only because he's a fantastic guy, but because he does insurance. And insurance is impacting so many deals right now. A lot of people are saying, I can't get this deal done because insurance, taxes, payroll, my goodness, none of these things work. So I thought it would be great to have JT Lynch join us tonight. Again, he's one of our regulars. He has brought one of his partners with us. Brian Crisp is in the house with Element 22 Insurance, and we're going to learn a little bit about them and how to deal with the insurance today, how it's impacting. So JT Lynch is a commercial insurance broker with Ramey King Insurance. They're out of the Dallas-Fort Worth area. He holds certificates for commercial lines covered specialist, as well as construction risk insurance specialist. JT has clients across the United States and will work with you to ensure your investment is properly covered while meeting lender requirements. It's very important when you have a conversation with your insurance broker, what kind of debt are you going to be putting on this? Because we have different requirements, and JT can help you with that. He is an investor himself and enjoys helping others close on their deals. We're also going to hear from Brian Crisp, as I mentioned, from Element 22 Insurance. He's been in the insurance industry for 13 years, working with both the company side and the wholesale side, with a focus on multifamily housing and condo associations. He too works with agencies across the country to find the best insurance program based on the property's age, location, and insurable values, placing the business in excess and surplus market. So I'm thrilled that we've got some industry experts tonight to share with you what is going on in insurance with multifamily. So welcome to you, JT Lynch and Brian Crisp.
Thanks,
Glad
Julie.
you're here.
No, glad to be here. Always love Zoom-A-Date. And I brought an awesome guest with me, everybody. This is somebody that I work with, Brian, at least weekly, if not daily. He helps us so much in getting these properties placed, and we wouldn't be able to do a lot of what we do without him. And he's going to be able to provide a little bit higher level insight to what's going on with the industry, and also kind of give you an idea of what's going on with the underwriter standpoint. So what I'm going to do is I've got a slide here, very short and brief. I've got a couple of announcements, and then I'm going to go over kind of the timeline and the process of how to get an insurance quote. I know a lot of people get something under contract and they're going, okay, well, where's my quote? Well, it's a little different than just getting your personal auto insurance. So I'm going to go through the steps of that and then pass it over to Brian. He's going to talk a little bit more high level, like I said, from the underwriter standpoint, and also what's going on in the market. What the heck is going on? So let me share my screen here. All right. So Julie, feel free to chime in, Brian as well, if you want me to elaborate on anything. I don't feel like I'm talking to myself, right? So this is new news that I wanted to share with everybody. So Ramey King is now in partnership with Ironwood Business Consulting. Basically, we've established a working relationship to provide your company with regulatory telephone support with a team of HR, safety, and DOT specialists at no cost to you. It's paid for by Ramey King. It's intended as a management ownership support line, and the service is available to all active Ramey King clients. So what does that mean? What do they actually do? This would be, most of these services are going to be utilized by my clients that have that are contractors, that have fleet vehicles, things like that. But for apartment owners, I can see you can definitely take advantage of these human resources, especially if you're self-managing. This is a free service. If you've got a question about what's going on, call them and they're going to be happy to step through this for you. And again, as long as you're a Ramey King client, then this is available to you. And then I was joking with Brian Chris. I wanted to go over this again because not enough people know this. 74% of fires in apartment buildings start in the kitchen. It's twice the number than at your house. At Sean Griffin's house, he's not setting kitchen fires up all the time, right? But in these apartment buildings, it's happening all the time. Most fires that occur there, and most of the claims probably, it's because of these small kitchen fires. And there's something that you can do about it, and it's very inexpensive. You can go. I went on to Amazon today. You can get a pair of them for $80. They're these small like tuna cans, and they've got a magnet on them. You magnet it up to the vent hood. As soon as flames touch it, then it'll extinguish the flame on the stove there. So it's such a simple thing to do, so inexpensive. You don't even have to have a licensed contractor do this. It's just a magnet, right? And so I try to tell everybody that I can about this because I just think it's such a simple thing. And why doesn't every apartment complex have this, right?
Now my question is, am I going to get better insurance because I put those up in?
It used to, there was a few carriers that would offer a 10% discount if you had these. Now, what we would like to do is you tell me that you've got these installed or you're going to install all of them, and I'm going to go to the carrier, let them know, and then hopefully they can give us a more favorable rate. Instead of a flat 10%, it's definitely going to help. And Brian can probably touch on that a little bit more. But any little thing like this, you want to let us know about. I don't really care if you put new shutters on the building. What did you do to make the property safer? What did you do to improve this is the overall safety and appeal of the property for an underwriter standpoint? That's what I want to know. And my job, and as well as Brian's, we we're going to the underwriter to sell them on the idea that they need to insure this property. So everything helps. I added more security cameras. I put fence in and gate access, things like that to make it safer. All of those things, let me know what you did. That way we can tell the underwriter.
That is going to probably ruin your dinner, as Charles said, but we're going to get over that one.
Yeah. And so this is something that I haven't touched on before, but I wanted to go through what the insurance process looks like once you get something under contract. I think people have different, I don't know, just different ideas of how things are supposed to happen or how soon things are going to happen. So I wanted to go kind of from the first step. So the buyer's going to find a deal, looks good in their underwriting, and they want to submit an LOI on it, right? At that point, you send Julie and I the rent roll, the T12 and the OM. And then I'm going to send you a free insurance estimate to help with your underwriting before you even submit the LOI. Julie's going to take a look at the loan for you and get everything ready to go for you at that point. And then you're going to submit the LOI, and steps 1 and 3, as you know, you may have to do that 10 or 15 times, whatever, before you get your first deal. And that's okay. That we understand that. But eventually, I promise you, eventually your LOI will be accepted. All right. At that point, oh crap, JT, what do I do? This hasn't happened before, right? So at that point, let me know the LOI was accepted. I'm going to send you a list of items I need to get solid quotes from carriers. It's probably going to be items that you don't know yet already until you do due diligence, like the age of the roof and the loss history. And yes, Sean, I need the loss history. Okay. If you say, oh, I can't get it, or oh, I've heard there's no losses, so just give me a quote with no losses. No, it's not going to happen, right? So I need that loss history. And you want the loss history too, right? Don't you want to know what happened to that property you're about to spend $20 million on? Don't you want to know if there was a $5 million fire there 2 years ago? Yes, you do. So get the loss history.
Now,
And
let me ask
go
you a
ahead.
question about that. Do you typically get that before that's after, right? The LOI, they're going to open up and say, yes, this
Yes.
would happen. But typically you're not going to get that information.
You won't,
as
but
pointed
yeah,
out here.
but make sure, but you will sometime. If there was a loss, a lot of times they might disclose it, but yeah, you're not going to see this loss history and until you get under contract. And there's nothing that I can run. This isn't like personal lines. I can't run a report. There's no way that I can have access to it. You're going to have to get the owner to ask their current broker for the loss history for you. And so next, what I do is I fill out a habitational form to send to the underwriters. It looks like this here on the right. And now you can see there's a lot of information that I have to have. Charlie Rushton, why do I keep bugging you for this stuff? Because unfortunately, I have to have this filled out before I can send it to underwriters, or they'll just bounce the email back and go, fill this out, complete before you send it in. All right. So I have to have all this information out. And fortunately, I can find a lot of this information out from the offering memorandum already, from the county website. And then maybe we have some history with the property already. So a lot of this I can find out already, but I will need your help with a few of it. I'm going to contact your lender to see what deal specific requirements there are. Even Fannie and Freddie loans, they're going to have their requirements, but all of them are still going to have their own building limits, business income limits, and umbrella limits that we're going to want to know in order to make your quote fit what the lender desires. After that, I'll let the underwriters know what the limits are, what's being required, and then they'll send over quotes to me. I present the best option to the buyer, and then we send certs and invoices over to the lender, and then we wait for closing. After that, the deal gets closed. Congratulations. Just like everybody knows here, when you get married, the first question that's asked is, when are you having kids? Well, same thing. After you close, Julie and I will congratulate you and ask you what other deals you're looking at, right? So,
okay. I do have a question.
Go ahead.
I don't know if you're going to answer this, but the quote that you're going to give us,
yeah,
when you reach out, we reach out, you give it to us, and then we end up closing. How close are those? How close in price are those? Have you ever done any studies, any data, so that people can understand, hey, I know I told you it's $148,000, and it
Yeah.
came in 200,000. Kind of,
So this stage here versus the final.
yes.
Yeah, that's a great question. Man, I would love to say that I'm within, gosh, $5,000. The market right now has skewed that a little bit more, but it depends on the risk. If it's somewhere, Julie, you were asking this before this, where do I go where insurance isn't crazy? Well, think of places that don't have crazy natural disasters. We're thinking the Phoenixes of the world, or maybe a brand new build, right? If it's something that's I guess easier to underwrite, I can get it, I mean, pretty close within a couple $1,000s.
Fantastic.
There are some things that I just don't know. I don't know if there's losses. Maybe you don't either. It's nobody's fault, but all of a sudden, yeah, there are losses where there's some bad breaker panels or wiring, or the crime is just terrible in the area, things like that. So things can throw it off for sure. But then also, Brian will touch on this too. The market changes all the time. It seems like it almost changes every week now. So maybe the carrier that I thought, hey, we just use these on 2 like-kind properties in the same area, and they gave us a rate of this, I should be pretty close, right? But now that carrier is at capacity on the coast and they're not writing any new business. So now what I thought I was going to get a quote for, I have to go somewhere else, and it could be off, and it could be off quite a bit. So I try to get as close as I can. I know that helps with everybody's underwriting, but there's a lot of circumstances that can come up that cause that. So, but good question. Thanks for bringing that up.
I have another question.
Mhm.
When there is no security on the property, and maybe there has been some murders or some bad behavior, and you recognize, hey, we know this, the lender knows this, we're going to implement a safety or a security system when we take over.
Yep.
Is there a time frame that needs to be put in order for that to be covered, or does the insurance company come back and change those premiums? How does that work?
Yeah. So with something like security, the underwriter might not care at this point. They'll care at renewal to see everything that you've done. But at this point, hey, those crimes happened. That's great that you're putting in a new fence and lighting and cameras and all this. Let's see the proof. I want to see you as an operator and how you can improve that, next year. There are cases more like, hey, your roof is falling apart and it looks bad. Look, I understand. JT, tell the underwriters, as soon as we take over, we've got a plan to replace that roof. We've already got CapEx set aside. Here's our timeline for it. Here's what the contractor said. And as soon as it comes in, we're going to have it done in 2 months. And something like that, then I can go to the underwriter and they'll go, okay, we're going to be out there to do an inspection, a month after this binds, and the roof better be brand new, or we may cancel you or something like that. So it is possible that you have some issues that you plan to fix, that it could affect underwriting. So certainly, yeah, if you've got CapEx items to address that, then let me know for sure. And the underwriters are probably going to ask anyways, hey, do you plan on addressing this? What are you going to do if it's a big enough deal? So, after everything's said and done, there's a lot of people that want to know some other questions, kind of behind the scenes questions. So, I get this all the time, joking with Sean about this, but the owner said there aren't any losses. Just give me a quote, right? No, we got to have loss runs. There are some cases that maybe we don't. Maybe we can use a no known loss letter that you sign that says, to my knowledge, there haven't been any losses from this period to that period. But if you want a better quote, then get us loss runs. What is the underwriter doing over there? What's taking so long? What do you mean my insurance premium is this? And this is funny. The property is brand new, has brand new shutters. Why did the underwriter decline to quote it? And what's up with the insurance market Is it ever going to change? So these questions I get asked constantly, and I've brought on somebody that can help answer that. So Brian, can you introduce yourself and kind of what you do again,
Sure.
and
Sure.
tell a little
First,
market breakdown? How do I unshare? Stop sharing. Here we go.
Yep.
thanks for the invite, JT, and thank you to Julie also. So my name is Brian Crisp. I'm based in Charleston, South Carolina. I work with Ramey King along with a few other agencies, really as a part of their team, because what happens is when you guys send a apartment that you're looking to buy over to JT, he's going to take a look at it, and there's going to be some markets that he can go to called the standard markets, which means, that you can think of them as having commercials on TV, the Travelers, the Hartford, the Liberty, the Nationwide. It's going to be those markets that in preferred areas, they're going to take it. They're going to offer better pricing, better coverage, and just make it easier. More and more these days, as the market has gotten hard, things have come over to the excess and surplus market, which is where I work. So I deal with domestic carriers, London-based carriers, Japan-based, all over European based carriers that they distribute their property programs in the excess and surplus market. So if you have any properties that you've had to pay taxes and fees on, insurance taxes and fees, that's the excess market. So, JT could probably speak to it a little bit better, but it seems like the large majority of properties, especially in multifamily these days, is coming to the excess and surplus market. So,
yeah, if you've got a property on the coast, you're not going to Travelers for that. If you've got a 1970s build anywhere, you're not going to go to Liberty Mutual for that. They don't want those. So where else do we go? I contact Brian Crisp, and he helps me find those excess markets.
Yeah, so just depending on the risk, we've got over 100 markets that we kind of go out to, and not all are going to be a fit, and sometimes we have to get 10 different markets to all share in the same risk. And so I'll touch on kind of how it all works and why the market's so hard, and the impact of inflation on this market, as well as some positive news. There is light at the end of the tunnel, I can promise you. And so I'll go through that, and let me just share my screen and I'll pull up, let's see. All right, can everyone see that?
Yep.
Okay. See if I can zoom in. All right, so I'll put this in the comments too, so that you can take it home. This is actually from one of our partners, ICAT, put this together. And so the soft market is really when price is real low, capacity is everywhere. Which capacity in insurance is kind of, if you take it to a lending side, Julie, if you could only lend a certain amount of money in Houston, you're going to select the best risks in Houston and loan on that, and then everything else is going to be a decline. And that's kind of like capacity for insurance, because insurance relies on money coming in. Right now, there's not a lot of money coming in, but it is starting to re-enter. So the soft market is when there's kind of an overflow of capital in the market, and it is just easy to place business. So 2016, for those of you guys that were in business in 2016, you realize a lot easier market, especially in Florida. You were probably paying a very small fraction of what you are today. And so I actually used to work for an insurance carrier. We were based in Florida. We wrote coastal apartments and condos in Florida, Texas, Louisiana, Georgia, South Carolina, North Carolina. Certainly Florida, Louisiana, and Texas are some of the tougher markets, but 2014, 15, 16, that carrier was making money. It was easy to place business. Deductibles were low, coverage we offered every coverage under the sun and still making money. And then, Hurricane Matthew came along. That kind of went up Florida. If everybody remembers, it went up Florida in 2016. Didn't do much damage to most of the residents in Florida and the Carolinas and parts of Georgia. But so the company was able to pay for that out of pocket. An insurance company has a deductible just like we have on our property coverage or our auto insurance. An insurance company buys reinsurance, and the reinsurance has gotten so expensive, and that's why rates have gone up. If the reinsurance is going up, the rates are to help it be profitable. But just going back to the carriers, so everything was making money. Even with the storm, the company still made money. Then 2017, Hurricane Irma hit in Tampa, which is where a large majority of the book was. And I think our deductible was $25 million at the time. So there was about $125 million in the bank in surplus. You pay out the $25 million, the reinsurers take care of the rest. And the reinsurers in Hurricane Irma were anticipating that storm was going to be a $250 million event for our book of business. Well, that's not a big problem. We had bought up to $400 million of reinsurance. So there was still $150 million of runway of reinsurance to pay for it after we paid the deductible to the reinsurance company. But then things started to, claims that were closed started to get reopened. You had some public adjusters, some attorneys, some contractors, and just to give you an example, we had one claim that it was settled. It was a roof claim down in Tampa. The roof was repaired for $60,000, and then 2 years later it reopened, and it went from 60,000 to 12 million, and it went to 12 million because the attorneys got involved, the public adjusters got involved, the contractors got involved. You take an attorney that takes 35%, a public adjuster that takes 10-15, and then contractors that overcharge the insurance companies. It has a way of it inflating itself. What should have been probably, even if the company should have replaced the roof instead of repaired it, maybe it wasn't 60, maybe they should have paid, $2 million just to replace the roof. It spiraled to 12 million. So that's kind of like where we're at now. So that's kind of been ongoing 2018, 19, 20, 21, 22. It's all been active. So the rates have started to drastically increase. And for a while, it was just underpriced. But what we're seeing now is that deductibles are high. In some areas it's 5%, some areas 7.5%, some 10%. Someone from Miami, I see sometimes some 20% deductibles, wind deductibles in Miami area. So insurance companies are protecting themselves to try and get back to profitability because they've been losing money for a few years now. And we're also seeing some capital start to flow back into the market, which is important because that's when the rates start to come down, the deductibles, the coverage, the deductibles come down, the coverage goes up. So it's going to get better. So I'm going to attach this instead of going storm by storm and everything. I'll attach it so that you can read it in your own time.
Hey, Brian, I also wanted to touch on real quick the replacement cost values.
Yeah.
So, for a while we had replacement costs. I mean, I think the lowest one I saw was like $60 a square foot, right? And so some of these properties had kind of been grandfathered into that and never changed at renewal. But as everybody knows, the increased cost of construction and materials, it costs a lot more nowadays to build a property, right? And so if a claim occurs, well, then they got to rebuild it, but it's not insured high enough to even cover those costs, right? And so what we saw last year was carriers said, we've got to right size this. No more of these $70 a square foot. We've got to increase this to normal amounts, to $110, maybe more, so that we can cover the claims that occur. And so when everybody was saying, you've probably heard it late last year and on to this year, oh, my insurance increased 30% or more. Well, they took a normal rate increase of 6 to 8%, but then they also got an increase in their replacement costs. So they brought it from $70 a square foot all the way up to $110. Those two combined are what's leading to those 30 to 50% increases. That's part of it. There's, what Brian talked about as well, but that's not. I know that owners don't want to hear, oh, well, that's great. At least there's kind of method to the madness there. At least they're getting your replacement cost value finally to the right level. That way, when you're have a claim, you're covered enough to be able to pay it out. So we're seeing that also too. Sorry, Brian, I just wanted to.
No, that's
Good point. Yeah.
great point. It was kind of, I hate to call it a perfect storm, but it's just both things needed to happen in the same year. Rates had to increase dramatically, especially on the coast. The cost of insurance itself outside of the property values would go up anywhere from 30 to 100%. Then you take property values on top of that increase, and it's just made it astronomical. So
yeah. And then
this is
real quick. So you were saying that carriers were losing money, right? Well, if me and you are in a deal and we're losing money, eventually we just got to back out of it, right? It's the same thing that carriers did. So there's a lot that were in Florida or on the coast in Houston that were writing business that they just said, we're not making money. Why are we doing this? So they just pulled out and they don't write business there anymore. Well, what does that do to the other carriers that remain? Now they're taking all the burden and all the risk for these properties that are there. Without competition, it's going to lead to higher premiums and higher deductibles also. So, yeah.
Just that example of the carrier that I work for, that when Hurricane Irma came through and we paid the $25 million deductible, and the reinsurer said it's going to be a $250 million event. We had bought up to 400, and then we actually in the following years, because it really took about 3 years to play out, and the litigation would take on, it would just keep on going on for years. And so what started as a $250 million event, it went to 350, it went to 450, it went to 550, and then our reinsurance tower, the top of the tower, as much coverage as we had, stopped at 580. And once you go above your tower, the company's done. And there's quite a few markets that have gone above their reinsurance tower and they don't have any money left. 2 years ago, they had $100 million in surplus that they could help pay claims. But, once that reinsurance tower is exhausted, it's good night.
And so it's actually the litigation side of things in Florida is pretty common, right? Isn't that one of the issues why Florida is worse than other places?
Yes. Yeah, absolutely. So I forget the exact stat, but like Florida accounts for, I think, 10% of the premiums or something like that nationwide. It's probably less, 5 or 10% of the premiums nationwide, but they account for 70% of the lawsuits against property carriers. And so, I'm not saying that the property carriers didn't do anything wrong in Florida. There was probably a little bit of give and take trying to navigate the market, but for that small of a number of the property premium account for that amount of lawsuits is kind of crazy, which you can see why a lot of carriers have pulled out of Florida.
Yeah, and I heard there's something, the Florida laws that make it easier to bring about a lawsuit. And so you almost see these lawyers and public adjusters are almost like storm chasers, like you see roofers around when there's a big storm coming out there, and it's bogged down the legal system too. So there almost has to be something that change statewide with the laws to help bring about some change also. So.
Yeah, and Florida has done some positive things just to, it's it's not the insured, the property owner's fault. It's not the public adjusters. You know, the insurance companies certainly share in some of the mess that was created down there. But the attorneys really got paid the most. You know, they would drag out the legal fees. There was no cap to what you could charge as far as legal fees. So where most of the time, there was a story on CBS News just this past weekend about the attorney's fees of a house after Hurricane Ian, and the attorneys had been paid $600,000 and the insured had been paid $12,000 so far. So it's just crazy what's happening, but you can see why carriers have to pay for all that. So you can kind of see why the carriers don't want to write in states and in areas that are challenged, not only the legal environment, but also the storms, the tornadoes, the hail, all those markets. So this is a slide that I like because it kind of shows the cycle of insurance. If you remember 2016, it was the height of the soft market when everything was cheap, everything was easy to get. JT probably wouldn't need me. Travelers would probably write most of this, you know, all the standard markets were in, but so that was kind of where the rates go into free fall. And then, you know, as it gets around this circle, I don't know if that you can see my cursor, but as it starts to get around this circle, the insurance companies, when they get to year end, they realize like, well, we didn't really have as good of a year as we thought. And then they have to increase the premiums. The market capacity kind of dries up. Like Julie, like I said, if you could only lend so much money in a certain area, you're going to pick and choose the best ones. And then we're kind of in this area now where when we get to the end of the year, carriers have increased deductibles enough, raised premiums enough that, you know, I mentioned to JT, it's almost like a cash grab at this point because they want to see, have they charged enough, you know, and with deductibles being high, premiums being high, the answer, even with the storm coming in, the answer is going to be yes. That they've taken the appropriate measures. And once they realize that they have a kind of a surplus of premium that they're going to be charged, then that it's going to start coming down. So once that capital flows back into the market, you're going to see it start all over again. And it's going to tick down. You know, first probably the premiums are going to start to decrease. And then you'll see.
Did you say that they're going to
deductibles go
decrease?
down, coverage go up.
Did I hear you say they're going to decrease? Because I've never heard that before.
Well, so in 2000, I think 12, from 2012 to 2016, all they did was decrease.
So there is hope that
Yes,
we can
yes.
get back. So what's the time frame? We're going to need to start to wrap this up. So what's the time frame on that?
So we're kind of in the late stages. You know, it's still too early to tell. But if the insurance companies all make money, I'll tell you something that I just had happen just the other day. If any of you guys have business on the coast, you probably heard of AmRisk. AmRisk is kind of the large player on the coast that it was actually for Ramey King. We were quoting something back in April. It didn't close, and I was asked to kind of like, you know, refresh the quote and get it ready for June, and the rate went down. It's the first time I've had that happen in years. The rate actually went down.
Get out of here. That's nuts.
So there is kind of some lights at the end of the tunnel. We just had a new market open up in Florida. They don't have much capacity. They only go up to 3 million in values, but it's new markets coming in. So
all right. Well, let's stop sharing, and I want to see your face because I want everybody to hear and see your face because you guys heard it here first. The rates are going to be coming down. That's what I heard you say. Is that right?
Yes. Yes.
That is amazing. I'm thrilled to hear that. And the time frame is now, keeping in mind the costs associated have now increased for coverage, right? You said the replacement costs. So we're not going to get around that, correct?
Correct.
So what kind of
That's kind of already baked in,
okay.
some of the rates that are charging, like I said, it's almost like a cash grab to see where they end the year.
So, you're thinking that by the end of the year, we could be lower. Is that what you're
Well,
saying?
yeah, it's all based on the price of reinsurance, where 2022 carriers were trying to place their reinsurance after 6/1 is a big date in the reinsurance world. So carriers were trying to place their reinsurance after 6/1 and just had to pause new business to try and put something together. And it was really like a crapshoot, where 2023, a lot of carriers had placed their reinsurance weeks ahead of that 6/1 date. So it's a positive sign that things are changing, that capital's coming back in.
Wow.
So,
Brian, you can come here anytime and be with my guests to deliver that fantastic news, because that's going to allow more people to get into this space. My goodness. All right, let's open it up. Are there any questions in the house? I know I am a little bit unsure, and I would like maybe JT or Brian, either one of you guys. People say, well, I've got this quote out to many different insurance carriers. Tell us a little bit about the philosophy on doing that or not doing that. I think it needs to be really clear why we need to build a relationship, just like you build a relationship and earn the trust of your lender. You also want to do this with your broker, your insurance broker. So can you touch on that, please?
So yeah, I'll take that. So as a broker, what I do is I get with MGAs like Brian, Chris. There's some others depending on the asset that we're looking at, your construction, location, all that. That I'll go to do the shopping for you. Just like Brian said, he has access to 100 different carriers, right? And so in order to get access to them, I have to go through Brian. But if you were to go to another broker like me, and I've already gone to Brian first, if they happen to know Brian, Brian will go, well, no, it's already blocked. I can't do that. But you go to another place that has access maybe to similar markets, that you're just muddying the waters. And we've seen it happen before where carriers make it the same submission. They go, you know what, your information is kind of all over the place. We're not going to write this at all. So just the best way to do it is get one broker that you know and trust. Let them do the shopping for you. At least let them go to the market for 2 to 3 weeks so that they can go to all the places they know. And then if you want to bring somebody else in just because you just have to, then call somebody else. They'll take a look at what's left. I do know that there are cases, if you've had another broker look at it, I've come in and said, well, no, that other broker's from New York or California. They're not used to Texas. So I've got other markets that they're not aware of that I can help. So, but really you just want one broker looking at it. So
that is exactly what is the situation in the lending world as well, folks.
Yeah.
You really do want to find a lender who can shop it for you, do a good job. Remember, this is a business. We're working together. You're building a relationship. You're trusting that person. So stick with, your partners.
Well, and Julie, I'll vouch for you. There's a lot of lenders out there. I will tell everybody this. When somebody says they've got something under contract, and I know that Julie or Old Capital is on it, I know it's going to get closed.
Mm-hmm.
And that's a big deal. That I don't know how you'll do it, but they always close, and you always find a way to make it happen. I don't know. That's got to be worth millions, possibly, right? To know that this deal is going to get done. All the earnest money or whatever you put down, Old Capital is going to get it done, and Julie's going to make sure that it happens. And that's huge.
And there's the value that Ramey King wants to work with us because they want to get paid. The brokers want to work with Old Capital because they know they're going to get paid. So that's why you set shop up with people that are going to deliver for you. So it's not only
Absolutely.
in lending, but it's also in insurance. It's also in property management. All of these things are going to help you get your deals done. So
Yeah.
before we wrap it up, I want to open it up. Is there anybody in the house that has a question that we can get addressed for you before we shift to our breakout sessions? Please, this is your opportunity. The experts are in the room. Ask the question. Don't walk away tonight saying, I should have asked. The time is now. Okay, Eric.
So JT, am I going to see that indication tomorrow?
Yeah, we got it. We got it.
There you go. All right, Eric, what do you got?
Thanks, Julie. I'm fairly new to the space, and JT is super nice to work with, super easy to work with. So I appreciate you, JT. My question is, in the single family space, there's some brokers I work with in that market saying that insurance companies are kind of pulling out of the Dallas-Fort Worth area, or some are due to all the weather, the hail, tornadoes, everything. Are you seeing that?
Yeah,
A parallel process?
The bigger news is State Farm and was it Allstate? They moved out of California altogether. So I think this happened last week, and they're not writing in California anymore. So it does happen often that carriers will change their appetites, or they just do not like this one specific area anymore. I mean, same thing. If you keep going somewhere and you're not making any money, you're eventually going to stop. That doesn't mean that they're gone forever. It just means right now they've got to kind of back up, sort things out, get their pool back, right? And then they'll move back in there. But yeah, right now things are changing. And yeah, Dallas, a lot of people don't think of Dallas as an area that's, you know, it's not Florida or Houston, but man, we get hailstorms, huge hailstorms all the time, and you can count on it. And roofs aren't cheap. I need a new roof on my house right now. You're just not going to see roofs over 10 years old here, and they're paying out a lot of money for those. So, but yeah, they may be leaving, but they'll be back.
All right, Charlie, what do you got?
Okay, thanks.
Thank you, Eric, for the question.
JT and Brian, thanks for all the information, very valuable. So my question is that are the premiums being affected in non-natural disaster states, as well as the states that, you know, have the natural disasters, or is it the premiums are just being inflated in those affected states?
It is certainly being impacted, but not near as much. Not near as much. Where, you know, if you're in Florida or coastal Texas, Louisiana, those are kind of the hot spots of where insurance is just kind of a mess. But you know, someone mentioned in the chat, I think it was Chris that said that he invests in Virginia, Michigan, Indiana. I mean, those are all preferred places. That'd be a good mix of your standard market carriers, and maybe if it's older or if it's got aluminum wiring or something like that, it would come to me. But you know, there's certainly some states that are more preferred than others.
That is a great piece that you just mentioned. The electrical. Where are we at with that? Do we have to have it absolutely changed over? Is it pigtailed? Tell me a little bit more about that. Either one of you guys.
It's got to be mitigated. Yeah,
Yeah.
you got to get that fixed. The cool thing is now we're seeing less and less of the bare aluminum wired properties. So they're getting fixed. But yeah, right now, I mean, carriers are they don't have time for it. You know, they don't have the money for it. No, you got to get these things fixed. So but does that mean you don't buy that property? No, you just need to know that you got to put some CapEx towards this, and that, you know, a good deal is a good deal. So
good point. All right, Candace, what do you got?
Great. I'm sorry I was late. Amazing presentation. What I got in there so far. My question is, you know, we seem to be running into a lot of places where their flood insurance is required, and I don't know, maybe this might be too detailed of an answer to the question. There's various different levels of flood areas, and it's kind of like looking at the map, you can kind of look at the colors, but how can you, is there any way that you can decipher whether it's a good risk to take, to not, or if it's in flood period, you just have to get it? Can you kind of touch on that?
Yeah, so on your flood maps, you're going to see usually two zones that you're going to want to worry about. One is it's the 100-year flood zone. It's that light brown area. So it's saying that in this area, you can expect a flood every 100 years, right? And so you'll see a lot of, and I think the property that you looked at in Phoenix, so when you're talking about, so a lot of areas like Phoenix, maybe Abilene, Texas, Lubbock, Texas, a lot of those will have those areas because it's so flat. When it storms, there's nowhere for the water to drain, right? And so it's not a normal flood place like you'd see next to a river. It's just because there could be water that comes up because there's nowhere for it to drain. So that's a lot less risky than if you live right next to a river and that banks overflow and can come to your property. So those light brown areas, because they're less risky, some lenders may not require it. But if they do require it, it's going to be less in premium. It's maybe it's not as much as you think. Maybe it's only, $2,500, $5,000 for the year. However, I do have a contact with national flood experts, and what he does is, these FEMA maps, some of them have never been changed. All right. And so we all know that when you build a property, you're changing the landscape. And when you're building streets and different things throughout the city, things change, right? Things change naturally all the time with different floodways. So the maps need to be updated. And so what National Flood Experts does is they go in with their engineers, take a look at the elevation certificates and see if those lines need to be changed. He does it for you for free for the initial consultation. If you decide to use his services, he'll work with FEMA to get those either completely removed or at least changed from a zone AE to a zone like 100-year, or maybe now it's just one building that's in the flood zone versus the entire complex. And if they're successful in doing that, they charge you 1 year's worth of what your flood premium was. And then after that, your flood zones have changed. So if you've got a property like that, let me know. I'll get you in contact with him. And we'll see if we can get the flood zones changed a little bit, because it seems crazy to me that these FEMA maps are so old.
What a great resource that you are to provide that. That's fantastic. All right, let's take this last one with Sean. Sean.
Hey,
Let's get that question.
Let's rewind and go back to the electrical issue on when you say something that has to be mitigated for the aluminum wiring. Is that just the pigtails, or is that the Alumicon connectors? Is it all of the above? And the reason I'm asking is we've had a lender that came in. We had the property when we took it over that everything was mostly pigtailed, but then they came back and said, you need the Alumicon connectors on the other end of everything, the outlets, the lights, everything.
Yeah. It's interesting that lenders are involved with that now, but I've seen that too. It just depends on the lender. And unfortunately, that's the answer to a lot of things. How much building amount do I need? What's the size of the umbrella that it really depends on the lender. I've seen some, not that many carriers, but I've seen a couple that care if it's pigtailed or Alumicon. So it's just kind of a toss up, actually. I would say be ready to spend money if you've got that wiring. And just go with the flow as best you can. Unfortunately, there's no way to really know what they're going to want until it's too late, really.
Well, hey, I really appreciate you guys.
Yeah, listen, I am thrilled to have Ramey King, the guys over at Ramey King, especially JT. I built my team with JT on it. Most, if not all of my clients go to JT because he will deliver indication very, very quickly. Those are the types of partners that you want. That's why we bring them here. That's why they're part of my team. So make sure you connect with these guys. They'll make your life so much better. And they will, they work on my behalf because they know I have a certain level of commitment to you as my client. So they too buy into that. So
can't let Julie down. Yeah.
No.
She'll let you know about it for sure.
So
Just-
I want to thank you guys. You
Yeah.
know, JT wears the shirt. He is a believer in Zoom at 8 as well. Look at that. And hey, JT, thank you so much. You do an amazing job, and always here to support me as well. So
Absolutely. And Brian, thank you so much for coming on and giving
Yeah,
us
thank you.
that more high level insight. So I really appreciate everything that you do.
And just one takeaway from the whole thing, just remember that both me and JT have to sell, your property to the insurance company. So anything that can make it more sellable is a huge help, whether that's, the fire stops that JT mentioned, more loss history. I think JT mentioned that as well. If you only have 1 year, you're going to be limited on carriers. If you've got 3 years hard copy, you've kind of got the market. So the more loss history, the better, even if it does have losses.
Yeah.
So we
And
just
we're
have
not,
to sell.
we're
it
not
to
talking
these insurance
about like you planted new flowers out there, right? And improving.
Right.
You're talking about big safety changes for the property. But
Yeah.
those loss runs, don't take the owner's word for it. Get those loss runs. You would want them to. So yeah.
yeah, I mean, again, we're crafting a story with the lender. So give us the information. Tell the same story to JT and his team so that they can craft the story. We're here to help. We're here to get you the best product for what you're trying to get done. So again, thank you guys. Appreciate it.